Good morning, sports fans. It is, I nearly say it's Friday, but it kind of is a synthetic Friday for yours truly. It is Thursday, you mugs. It is the 4th of December. You join myself and Mr. Brown for the morning blast. As usual, get the disclaimers out of the way. Beware of trigger warnings, beware of rants, beware of expletives. This is all recorded live. This is your favorite morning podcast revolving around markets. Well, we say revolving around markets. The tangents we go on is pretty much anything we feel like talking about. But there you go. Nothing discussed on this podcast is trading or investment advice. Nothing we say is an endorsement unless we make it extremely clear it is so. Michael, how are you, my dear friend?
Well, a very good morning, Sharon. Good morning, everyone. I'm not too bad at all. And do you know what? Although it is raining and it's dark and it's glum outside, it does feel a bit like a Friday today.
Well, especially as I'm in town. Wink, wink, nudge, nudge.
Oh, and my day just got infinitely fucking worse.
Oh, stop teasing. You all know what you really mean.
Public service announcement for anyone who isn't aware yet. Tom Talks Cars is in Dubai. He's only told me 4 times.
Oh, God, he's not mentioned it. Is that where he is?
No, he's been very quiet, hasn't he?
No, he's not posted any pictures on social media. I don't know what that's about.
Disgraceful.
And also, I can report that Royal Tunbridge Wells is still without water.
Yes, that is, well, yeah. And actually, do you know what? I am, on behalf of Tunbridge Wells residents and my parents, I'm going to have a bit of a rant about that because it is absolutely, for those who are unaware,
the Tunbridge Wells. Royal Tunbridge Wells.
Yeah, indeed. Royal Tunbridge Wells is now into its 6th day without running water, apparently due to some sort of cock up at a chemical factory, which meant that the water that's coming through the taps isn't safe to drink. And perhaps the worst bit of all of this is that the chief executive of South East Water, not only did he go to ground, he then decided to ring up the local MP, who's actually doing a very, very good job, despite him being a Liberal Democrat, and completely lost his marbles. And apparently the bigger issue is the fact that the MP has been trying to solve this problem and not the fact that South East Water fucked it up in the first place. As you say, completely lost his marbles, getting very personal with him, claiming that the MP knows nothing about the water industry. Well, David Hinton, judging by your performance, you know fuck all about the water industry as well, because you can't run any.
Yeah.
It's an absolute disgrace.
Go fuck yourself.
If anyone does want water in Tunbridge Wells and can make it to Blackheath, I don't know, 40 quid a litre or something out of my tap if you fancy it.
Oh, good bargain. Well, you know, it's a seller's market, I guess.
Well, it would be like the old Peckham Spring, if anyone remembers Only Fools and Horses.
Well, that ties in very nicely to some artwork we've been sent.
That's why I mentioned it.
I'll let everyone guess who's who from the Only Fools and Horses universe, but we'll give you a clue. Clive Lambert is indeed Uncle Albert, drawing the floor. Speaking of Clive Lambert, shall I crack on with his market update and technical levels for today?
Indeed. Before this all goes down the drain, let's do that.
Oh, well done. Well done. Right, good one. Right, so as usual, let me give an update on market action and where we see the big levels. This is all obviously, as always, courtesy of our dear friend Clive Lambert at Futures Techs. Equity markets were mixed to bullish again yesterday. The only standout being the Dow futures, which posted a decent green candle. Don't get Michael started on the Dow. Obviously, it's the most hated index.
Yeah, I do fear Clive may have just included that to wind me up. Actually.
Yeah, very potentially. Oh no, hang on. Wait for it. I didn't finish reading the line that he sent. So it's one of its 30 constituents must have caught a bid, which is about right. Yeah, it can be very warped by just one or two stocks. So that's why a lot of us hate it. Bonds, German bonds, they rolled up to March. So make sure you roll to March if you are trading that. Yesterday was green, but were being offered overnight. We saw further dollar weakness yesterday, which saw euro dollar through 1.1640 and cable smashing through 132.75 and 132.84 to hit 133.54. Sterling also strengthened against the euro. Michael, before I carry on, or actually I'll tell you what, let's go through this first, but then I would like to get your input on sterling strength, because as we know, I am the perma ball of sterling, but even I'm a bit miffled by this, or whatever word.
Baffled, is that the word you're looking for?
Yeah,
there we go.
Baffled. It feels like a hybrid I'm going for, but as you know, I've had fuck all sleep, so apologies.
Oh yeah, we'll let you know.
Gold, the yellow metal, set a damper tone, but nothing to worry the bulls too much. Ditto silver, which didn't emulate the 59 spot 65.5 overnight. High once again once volume kicked in. LME copper, London copper, surged to a new all-time high at 11,540. The rest of the base metals complex just shrugged. Brent and WTI, the oil benchmarks, very uninteresting. This is, day 4 of the hostage crisis for them. They don't seem to be wanting to do too much at the moment. Henry Hub, dip buyers, obviously the US natural gas. Dip buyers are doing their thing for now, gunning for the 5 spot 198 and 341 levels next. You on this side of the pond, European gas.
Sorry. I love how the bloke who used to be the biggest market maker in that contract has now forgotten how to quote a price.
Oh, mate. Do me a favour. Honestly, you're very lucky I managed to remember my name this morning. And this isn't hangover related, if anyone's wondering. I've just had severe insomnia for like day 2 now. So I am all over the place. Get me a beer, basically. Where was I? European gas, TTF Dutch based, posted another doji shy of the gap resistance at 29 spot 615. This level needs retaking to give the ball some rare cheer, but it's not happening so far, even though it's quite cold this morning. There you go. There puts his hand out the window. This has now posted 13 red candles in a row. So unlucky for some, which is pretty much unheard of across any market or asset class that these Clive's looked at in 25 years. Buy your 25s. Mine, he's about 208. European carbon markets, they saw the 3rd red day in a row, but it's still north of key support down at 80 spot 42 to 50, so the bulls can rest easy. Corn, agricultural markets now, is holding the Marabuzu support at 442. Wheat, the ginger stepchild of the ags complex, is stuck between short-term Fibonacci levels at 531 spot 6 and 545. Soybeans look to be forming some sort of short-term head and shoulders top. Just to note, yes, Dutch gas, 13 red candles on the spin, daily red candles on the spin. That does not mean it's instantly a buy today, although the generator inside of me is going, where can I load up me TTF ladder? I know what. I'll see if it's on Pepperstone. That is an endorsement, by the way.
And I can sadly disappoint you straight away because it's not. But you can trade Henry Hub.
No. I can't quote it, mate. I can't quote it. I'm looking for that.
I'm sorry, I was just going to say, I hope our risk desk can, but that might be being a bit harsh.
Oh, God, yeah, good one. Right, talk to me. Sterling.
Yeah, well, actually, so I think 2 points I'll make on the pound before we sort of move on. Yeah, it was a very, very good day for the quid yesterday. In fact, it was cable's best day since May. Well, up well over 1% on the day and printing new highs this morning. Also, we are back above the 200-day moving average, which is about the only technical thing that you or I look at without Clive's input.
Yeah.
Why the move? Well, I think I would frame it more as dollar weakness as opposed to sterling strength, if I'm being honest with you. The dollar was much softer across the board yesterday. Everyone seems to be trying to pin this on the idea that Kevin Hassett is basically nailed on to be the next Fed chair, which he is, but we've known that for a while. And frankly, it feels a bit of a stretch to say that, the dollar diving everywhere is solely on the back of that. What I would say, though, is that if you look at which G10 outperformed yesterday, and the pound was the biggest outperformer on the day, it was those where shorts have been loading up recently and where sentiment has been very, very bearish, and in the case of the UK, rightly so. So I think it was almost a case of the weaker dollar was the trigger to get that move going, and then when that move did start going, and obviously we broke above 133, we broke above the 200-day, that's when some of the shorts in the market went, right, fuck this, I'm out, covered those positions, and then that exacerbated the rally. So, yeah, I wouldn't be sat here going, this is some sort of ringing endorsement of Rachel Reeves or the Treasury or anything like that. It's more of a technically driven dollar move than anything else in my book.
Okay, yeah, fine. I'll take that.
But Rachel Reeves, if she's opened the front page of the FT this morning, she'll probably claim it as a win for her. So.
Oh no, absolutely. She's going to take responsibility. She's going to take responsibility and the kudos for when Tunbridge Wells finally gets some running water.
Christ.
According to Clive Lambert, the pound strength is due to, quote, technical buying, which for those of you that don't know is kind of code for no one has a fucking clue. It's just it's a bit more upper class and a bit more highbrow than more buyers and sellers. But if you ever see anyone say technical buying, it basically means, fuck me, we can't be bothered to work it out.
Well, and the other thing to remember is, we might be starting to see a little bit of an impact from some of the end of year flows coming in. We are into December. Again, we are nearing Christmas, aren't we? So,
listeners, that's another one for end of year flows is a great.
I managed to get that into a TV cross yesterday. I was very pleased
with a straight face.
Yes. Right. Shall we move on to more serious stuff? I did just want, because I was bored last night and I was looking at some stats on the equity market.
What am I listening to?
Well, no, don't worry. So obviously we bottomed out on the 20th of November, or that was the closing low, at least in the S&P and the NASDAQ. The NASDAQ is up 7% since that low, 2.5 weeks ago?
Yeah.
Guess how much Nvidia has moved over that time period?
Do you know what? I couldn't even tell you up or down.
Well, you don't need to because it's actually flat over that time period.
Do you know what? I'm going to take that as the weakest win possible, because I was like, it's definitely not up much. It's definitely not down much. So.
I just thought it was an interesting stat because every man and his dog is running around going, "Oh, Nvidia is the entire market." Well, since the bottom that we put in 2.5 weeks ago, it quite clearly isn't, guys. So all of those people worrying about narrow breadth.
Well, it's exactly what I was going to say. Exactly, because it's always the same fucking people on social media and whatnot. Oh, market breadth this, market breadth this, market breadth that. But as soon as it becomes irrelevant, they just shut up. They disappear. They'll probably go back to, it's probably the same kind of twats that do fucking Elliott Wave. Those wankers.
Almost certainly is. But I thought that was an interesting little statistic. Anyway, sticking with Nvidia, their CEO, Jensen Huang, met President Trump yesterday to discuss export controls, which Jensen is apparently in favor of. I'm sure he only said that because he was in the room with the man who's imposed them. He was also talking about sales to China and was saying that even if sales of the H200 chips were permitted, he's unsure as to whether China would accept them. Of course, this is a 1 or 2 generations old chip, so there are question marks over whether China would actually buy them. In any case, of course, Nvidia's financial guidance assumes 0 sales to China over the coming quarter, so it's unlikely to have a material impact. And actually, on that note, Cambricon, who are obviously a Chinese chip firm, Bloomberg reporting this morning that they are aiming to triple their semiconductor output in order to replace Nvidia in China. And they are said to have won new orders from significant clients such as Alibaba. So again, that divergence between China and America trying to effectively rely on their own companies to supply these AI-related chips. Sticking with China, we mentioned yesterday about this embassy in London and Keir Starmer, the Prime Minister, visiting China. Well, Reuters note that visit is going to take place between the 29th and the 31st of January next year. Potential approval for that embassy could actually come a week before that visit. So we're looking at the sort of 20th or 21st of January for that one. Moving on to the economic data that we had yesterday, it was a bit of a mixed slate out of the United States, actually. We had the ADP employment report for November, which pointed to 32,000 private sector jobs having been lost, well below the 42,000 gain that we saw in October. But actually the breakdown of these jobs was very interesting because while small businesses lost 120,000 jobs, medium-sized firms added 50 and large firms added 40,000, which to me suggests that the larger businesses within the economy are better able to weather the uncertainty that we're seeing on the outlook and can actually sort of bide their time in this no hire, no fire labour market for longer than their smaller counterparts. And I think that's just a divergence that's going to be interesting to keep an eye on over the coming months. Speaking of divergence, despite the much softer than expected ADP employment report, we had a much better than expected ISM services survey. The headline metric rising to 52.6 in November, up from the 52.4 that we saw in October and printing a 9-month high. Well, the prices paid metric, that fell to 65.4, which was a 7-month low. So very much a sort of Goldilocks-esque services survey from the ISM, although that prices paid metric is still a little bit elevated, but certainly nothing in the report that's likely to deter the FOMC from delivering another 25 basis point cut next Wednesday, albeit in what will be another divided decision, but we can cover that next week. In terms of other bits and bobs from yesterday, we did hear from the Treasury Secretary, Scott Bessent. He was giving quite a wide-ranging interview to the New York Times. On trade, he noted that China is on track to keep, quote, every part of its deal with the United States, which is brilliant, but we'll see how long that optimism lasts. Speaking of optimism, Bessent was also saying that he's optimistic in terms of the Supreme Court ruling on tariffs. This is, of course, the IEEPA case. We are awaiting a judgment on that. As far as I can work out, no one has an ETA of when that may arrive, but it is likely to be before the end of the year, so we'll keep a close eye on that one. And Bessent was also talking about the Fed yesterday, and I thought these remarks were very interesting because up to now, the Trump administration's sort of ire when it comes to the Fed has been focused almost entirely on Chair Powell and the Board of Governors, people like Lisa Cook, who they're obviously trying to oust amid these allegations of mortgage fraud. Well, it appears that may be starting to change because yesterday Treasury Secretary Bessent took aim at the regional presidents. Now, for those who are unaware, the way that the Federal Reserve System works is you've got a board of 7 governors in Washington, D.C., and you've then got 12 regional banks, each of which has a president spread out across the United States. Well, Bessent has taken issue with something quite specific around these regional presidents, and that is their residency, namely whether or not they live in the district that they represent. And Bessent is going to propose that presidents live in their district for 3 years before they are able to be nominated to run the Reserve Bank in question. Now, importantly, this proposal will not be retroactive. So people who are currently presidents of Reserve Banks will stay in their posts. It's a case of when they need to be reappointed. But it was quite an interesting one that he explicitly mentioned how 2 of the regional Fed presidents currently used to work at the New York Fed. And of course, they would be Alberto Musalem and Laurie Logan. Now, I don't think it's a particular coincidence that Alberto Musalem and Laurie Logan have been among 2 of the most vociferous hawks of the FOMC in recent weeks.
Mate, I've not had any sleep for 2 nights. What the fuck did that word mean?
What word? Hawk?
No, you prick. You
vociferous.
Yeah, that one. You absolute
loud
wanker.
and aggressive.
There was no need to say that.
There was every need to say that.
Well played.
Loud. Loud. Let's put it that way. They've been the hawkiest hawks on the committee.
Oh, there we go. Why could you say it like that?
Because I sound like an idiot. And I do think
Just to remind people, we do cover all levels of brow. I think we just made it very clear that I'm covering the low brow side of the equation.
Well, I tried to do the highbrow bit, but, we saw how that ended up. Anyway, I think this is just worth watching because it could be the next sort of big battleground in terms of Trump's battle against the FOMC. We, of course, are due to be getting the reappointment of these regional presidents in February. That's usually a sort of pro forma event, but that may not be the case this time around. Just to rattle off a few other bits and bobs, appreciate we've gone on a bit this morning. Sticking with the Fed, there was an FT piece doing the rounds yesterday that apparently some bond traders had been warning President Trump and the Treasury that they shouldn't select Hassett as Fed chair. This was interviews that took place in November. Their concern was basically that Hassett is going to cut rates to please Trump, which is a valid concern, but he needs to take the rest of the FOMC with him, which he's not going to be able to do unless there's an economic argument to do that. Also, in terms of monetary policy, Reuters had a sources piece out overnight saying that the Bank of Japan is likely to raise interest rates at their December meeting, with that being a decision that the government are likely to tolerate. Bloomberg have had their own sources piece out, basically rehashing that in the last half hour or so, and that is why we see dollar yen trading south of the 155 figure this morning. Moving into the tech space, Microsoft, there was some conflicting reporting around the firm yesterday. The Information, who are a technology website, I suppose, they noted that Microsoft has apparently lowered its AI software sales targets for a number of staff within the firm. However, Microsoft later came out and said, actually, that's not true. These quotas have not been lowered, and very much pushing back on those reports. It was notable, however, that when the initial report crossed, we probably saw the NASDAQ future trade maybe 0.5% lower in the following 10 minutes or so. Obviously recovered that into the close, but it just shows how sort of susceptible and vulnerable the market is and how jittery things are around the whole tech sector at this moment in time. Indeed. Sticking with the tech sector, Apple, one of their top design executives, a guy called Alan Dye, he is leaving to go to Meta. Of course, Apple have had a significant talent exodus in the AI space recently. Looks like that is spreading to other parts of the business. And sticking with Meta, the European Union Biden. They're going to launch another antitrust probe into Meta.
So.
I know. Apparently, this time it is over the integration of Meta AI into WhatsApp. I mean, it's just any excuse to give them a fine at this point. And last, by no means least, just to go back to the UK very briefly, we did have confirmation yesterday of the quarterly FTSE 100 rebalancing, which I've never usually mentioned. But the reason why I do is because while British Land are going to be added back into the FTSE, WPP are going to be leaving the benchmark index. For those who are unaware, WPP, formerly run by Sir Martin Sorrell, as he is now, massive advertising firm. They've been in the FTSE 100 since all the way back in 1998. So it does really feel like a proper sort of changing of the guard moment, particularly, just lastly, given that the UK, used to be very much a world leader in terms of advertising. And, now the biggest ad firm is being thrown out the blue chip index.
So they've been in the FTSE 250 for as long as you've been alive, basically.
The FTSE 100, yeah,
FTSE 100.
Absolutely. And do you know what's really depressing about that is the way that Bloomberg headlined their article was they've been in the FTSE 100 almost 30 years. And I went, fuck, that makes me feel a bit old.
Well, you can shut up because I think I speak to most people when so you are still very much the young whippersnapper. But anyway, thank you for that, Mr. Michael Brown. So I'll just read off some of the choice headlines, or some of the choice stories, should I say, from the Overnight News Roundup. As always, do subscribe to our Substack. It is the best way to get the headlines and the market moving stories that matter. So delivered straight into your inbox, courtesy of our good friend, Zach Eisman. We follow him on Twitter, X, whatever you want to call it as well. So what else have we got? Census Bureau. The US Census Bureau said on Wednesday it was adopting several strategies, including shortening the window for principal federal economic indicator collection, one for the nerds and Michael Brown, to get economic data back to their original release schedule as quickly as possible. So just what you want from a bureau or an agency that kind of struggled to get accuracy at the best of times, and they're going to rush it through. Great. The Trump administration will increase vetting applications for its H-1B visas with a specific instruction to reject anyone who is involved in censorship of free speech. So it'll be interesting to see how they define that and use it for their political gains. Who am I to judge? BOJ, Bank of Japan, Michael's already covered that, so I'll skip that. The Japanese 30-year bond auction drew strong demand, as the strongest demand since 2019, in fact, for the 30-year tenor, as elevated yields drew investors. Japan's Nikkei rallies on physical AI bets. The Nikkei share average closed at a 3-week high on Thursday, extending its rally for a third session as robot makers led gains on bets that physical AI will fuel growth. China has set its daily reference rate for the yuan at a level that was significantly weaker than estimated by traders and analysts, suggesting the central bank is aiming to ease gains in the managed currency. Sticking with China, their 30-year bond yield is heading towards its highest level in years as investors withdrew fixed income funds, underscoring jitters ahead of high-level government meeting in Beijing that may shape policy into next year. Germany now. Chancellor Merz' unwieldy ruling alliance with the Social Democrats is facing an existential crisis of its own making that could trigger its demise after only 7 months in office. A group of about 18 younger CDU lawmakers rebelled against a pension bill due to go to a final vote in the Bundestag, so I want to keep an eye on there. France now. French politicians must shift their focus from raising taxes to spending cuts to tackle the country's deficit. That's according to the head of the state auditor. This obviously goes on as politicians struggle to agree on a 2026 budget. And if they do agree and it's not what the public want, the French will strike. Because no one strikes better than a French farmer, that's for sure. UK investors, kind of following on from what Michael was talking about the FTSE 100 and shake up, etc. Obviously, net sellers of stocks for a record. UK investors were net sellers of stocks for a record extending 6 consecutive months in November. That's according to data from Calastone that was released this morning.
This price is only 6.
Well, tell me about it. As fears the government would cut tax advantages for investments in its closely watched budget contributed to cash out. Whilst Britain's energy regulator has approved an initial £28 billion worth of investments in the country's gas and electricity networks over the next 5 years, as it seeks to balance between upgrading infrastructure and keeping costs down. The UK government will struggle to fund spending No shit, Sherlock. Helping drive yield on the 30-year gilts to 6% in the coming year. That's according to David Zine, head of European fixed income at Franklin Templeton. To be honest, I'm making right. Goldman Sachs, they injected some caution into the debate over copper's prospects, saying its surge past $11,000 a ton will prove short-lived, as there will be more than enough metal to meet global demand. And incidentally, anecdotally, whatever you want to call it, yesterday I saw at least 2 stories of copper mines upping production or copper smelting plants being, fired up again and stuff like that. So there definitely is supply coming back to the market now. Prices are risen, and nothing changes the state of supply quite like the price. Geopolitical news. China is deploying a large number of naval and coast guard vessels across East Asian waters. At one point, more than 100 in the largest maritime show of force to date. China is in the middle of what is traditionally a busy season for military exercises, though the People's Liberation Army has made no announcements of large-scale officially named drills. Just a couple of bits as well on geopolitical news. We obviously heard overnight that Trump and Maduro, the Venezuelan president, had a frank conversation. Apparently it was very respectful. And it's been reported that Maduro has reportedly offered to leave Venezuela in exchange for legal amnesty and removal of US sanctions. We'll see how that goes.
Yeah, there was a report yesterday, day before, that he might be ending up in Qatar, apparently.
Well, there's not that I, please don't string me up if I'm wrong on this one, and please don't arrest me or if I end up going to Venezuela in the future or Qatar. But there has been comments over the last few years that significant kind of cargo planes are going from Venezuela and that in that direction. And the rumor is they're taking a fair amount of gold with them. And so, why not? Also, Medvedev, I can't find the headline because it wasn't in the overnight news roundup, but I did.
Oh, Zach, come on.
But Medvedev has basically said Europe using Russian assets is tantamount to a kind of declaration of war, so one to keep an eye on there, although he is incredibly hawkish on the war front. He's always talking about lobbing nuclear.
He's started 17 in the last 2 wars anyway, hasn't he?
Yeah, absolutely. In equity names now, Tesla, their sales in the UK dropped by 19% in November compared to the previous year, continuing a trend of market share loss in Europe to Chinese counter competitors. This is marked because BYD actually went up, so it's not a case of just all EV vehicles losing kind of on year, so one to keep on there, but definitely the theme that's been going through for a good few months now. What else we got in the single stock names before I hand back to you? Salesforce, they beat earnings, or AI product gains traction. They beat on EPS and reported slightly softer revenue figures for the quarter, but raised its full year guidance on its AI product. Well, so EU is planning, so you've covered that one, sorry. TSMC Arizona, the chip maker, or the chip kind of manufacturer, may start building an advanced semiconductor packaging plant ahead of the schedule on land currently set aside for Fab P6, with equipment installation possible by the end of 2027 if construction is smooth. TSMC had originally partnered with Amkor to provide advanced packaging when its Arizona facility is ready, but that's not expected to be until 2028. And finally, Wall Street Journal sources are reporting that the OpenAI chief, Sam Altman, has explored putting together funds to either acquire or partner with a rocket company in a move that would position him to compete against Elon Musk's SpaceX. But apparently talks are no longer active. I think, I'm not one to kind of, this is a bit out of my ballpark, which most things are these days, but it does appear that the wheels are starting to fall off of Sam Altman's bus / OpenAI's bus, and you start hearing more and more of these kind of things. You're kind of going, if you are an investor, you're going to wish you had an out. And I'll be honest, we've had rumors recently about potentially going to market and IPOing. It's, for me, the writing's on the wall that we're going. If they do IPO, it might be the top of the AI bubble, because we've seen it in the past. When we saw the .com bubble, you had all these insane valuations, and when they IPO'd, and that was kind of the moment they popped. That doesn't mean the companies far bigger don't come along in years to come, but it does feel a bit, that's, in my opinion, OpenAI could potentially be the MySpace of the whole situation, and who's going to be the Facebook? That's the question. But anyway, back to you.
So in terms of today, I'll do this super quickly. At 10 o'clock this morning, we've got the latest retail sales stats out of the Eurozone. Sales expected to have held steady in October compared to 0.1% decline that we had in September. And then at 1:30 this afternoon, we get the weekly jobless claims stats out of the States. Initial claims seen at 220,000 in the week to the 29th of November, up from the prior 216. Continuing claims at 1.963 million in the week to the 22nd of November, up from the prior 1.960 million. Do bear in mind, neither of those prints pertains to the survey week for the November jobs report. In terms of other bits and bobs, speakers today include the likes of Fed's Bowman, who will speak only on supervision, as well as the ECB Vice President de Guindos, Chief Economist Lane, and board member Cipollone, as well as the BOE's external MPC member Catherine Mann. And lastly, on the earnings front, before the market open, US retail earnings continue with the likes of Dollar General. Before after the market close, we hear from HP Enterprise. And that is all from me this morning.
Thank you very much, Michael Brown. Just a bit of history lesson from PIQ's own Uncle Albert. WPP, the market, what we call them, marketing giants, PR company, or what? Wouldn't they? They're not a PR company, are they? But apparently, there used to be a wire coat hanger company that was bought by Sir Sorrell, in order to be in the FTSE, and WPP stood for wire plastic products. There you go.
Indeed.
There you go. But anyway, guys, thank you so much. Michael, thank you.